welcome back to the video, everybody. So we're out. This is why Miami's the best city, bro. Not only are we just chilling on the yacht on Saturday, randomly. So this was the last minute plan. What time did I call you?
I don't know, like an hour before.
An hour before, and we just decided to book the yacht for the day. Look at that sunset. Look at that view. Look at the city.
You know where we're close by?
Where we close by?
Star Island.
You want to go to Diddy's? You trying to go to the freak offs, aren't you?
I didn't say anything.
That's exactly what you're trying to go to Diddy's freak offs.
I was just mentioning what was here out.
Listen, bro.
It's not a Diddy talk. It's not a Diddy talk.
He's trying to take a Diddy deal. Bro, you can't say that. Because I said the same thing about the Bugatti and then I popped up on one. So. But anyways, yeah, we're just here chilling now. Hope you guys enjoy the rest of the video. Hope you guys enjoy another live trading video for you guys. There's going to be more to come. Also, for those of you guys who haven't started trading just yet, you guys can go to the link in the description, the very first one, and get access to the free mini crash course. And we'll see you inside. So essentially the play of the day I was looking for was for price action to pull back to this 58.08s to go long for a bounce play up into the 58.20s, which the 58.08 is going to be this hour time frame level of resistance, which you guys could see here, you guys could see here, you guys could see this key level here on this lower time frame, and this was the overall trade setup here. So as you guys can see, the trade did play out well. Ignore Diddy. Now going into the actual first setup of the day, why I decided to actually execute myself into this entry was really simple. We had a lot of aggressive selling towards the lows here at 58.08. We had some buying come back in. Next candlestick opened up. We had a little more selling short stepping back in, but then we saw buyers come in. We had the rejection towards the downside. Everything is qualified as a high probability bounce play. So I ended up executing the position, stop loss under the lows. Take profit was the 820s, just like we discussed in the Discord. Now, the only thing with this actual trade setup that was concerning me is, if you guys see this here, this was the market open candlestick over here. We had the next candlestick come down, close under that area. This is where we had a lot of the volume, which is why I had it marked up. And after I made my entry, I saw price action reject that area because sellers were actually defending this area, which is why we saw that rejection there. So that was a concern of mine. But on this type of setup, I didn't go super crazy with the risk. I was risking about $7,500, which is low risk for me on this portfolio, and then I was risking about $3,500, which is also low risk for me on this portfolio over here as well. So I'm gonna let this play out for you guys here. So one thing that I was looking at here on the higher time frames, like, okay, well, the higher time frames still look pretty good for a bounce point or rejection off of this area. My stops are valid anyways. If I get stopped out, then you know what, we'll move on to the next trade, which ultimately I did end up getting stopped out on this position. So I want you guys to kind of understand the mindset here. I'm starting off the day down about $11,000 or $12,000. So you guys can see random volume did come in and price pushed below. So I'm gonna fast forward here. So here's my other trade. Now, when I executed on this position, what really made me execute was this was a candlestick that actually stopped me out, funny enough. And I executed shortly after that because, again, price action rejected. Look at all of this selling that came in, and then we had buying following up right after that. And we had a big rejection towards the downside. Price action bounced off of the VWAP, and the bounce play was still overall valid. So I decided to execute on that position yet again. Now, I went in with essentially, I don't want to say full size, but I went in with a little bit more risk than I normally would because the probability of this setup increased because we have yet another added confirmation. So this is kind of like one of those points in your trading day where you have to determine whether you want to continue to keep the same risk, whether you want to lower your risk. For me, in this type of situation, I took that first trade knowing that there was still a pretty good chance that we could see a little bit of a more pullback, but I didn't want to potentially lose out on an entry because I liked the confirmations that I did receive. So I decided to remove risk off of the table. Now in this situation, I decided to risk a little bit more on this trade because it was still within my normal risk parameters. I'm going about like half risk here, not full size that I normally do. And I haven't traded full size this entire week because the week has been super choppy, but this is typically around the size that I normally trade with. So I'm in 30 contracts long here on ES. And then over here, I'm trading 20 lots on SPX as well. So I am definitely a little bit more on the riskier side with the trade. But if the trade were to hit take profit and I'm holding to full TP, then it would be a position that's well worth it because I only lost 3,500 bucks on this position, and then I only lost over here like $7,500 on this trade, which I'm looking for a 4R multiple, and at this point I'm risking about $5,000 on this position. So if I were to lose on this position, I'd be down on the day maybe like $8,000, which is roughly a quarter of the profits, if not less, than what I'm up for the week. And then the same situation over here. So I analyze the situation I'm in throughout the week, how profitable I am this week, and how much money I'm okay and willing to actually lose on the setup, giving it another opportunity to potentially play out. And that's because it was a 4R multiple opportunity. Section rejects. That's when I'm like, yeah, I knew this was gonna happen. You know what? Like, I'm gonna have to stay with open risk on this position if I want to try and really maximize my R multiple potential. And that's the thing about like holding day trades versus scalps. When you're scalping, the risk is a lot smaller, although your trade quantity does increase, because I could have taken the scalp there for essentially a 1R multiple, made back my loss plus an extra R multiple on the day, and that's it. I could have called it a day. But in these situations where I'm looking for like that 4R multiple, like juicy position, you know, you can't do that. You can't be able, you're not like really able to move your stop loss to break even so quick. And that's why I tell you guys, like, if you're swing trading, you're gonna have a lower win rate, because a lot of the times, like, you're incurring a lot more risk by holding that position for longer. So I did remove my stops from break even, just trying to again focus on price, not really focus on the money, because there was a good probability that price action was going to pump to retest those lows of yesterday, which if we go back into the charts, price literally tested the low of yesterday and then dumped, which is what I was holding for. And again, it's like my goal with this specific trade is I'm not risking $4,700 to try and gain $6,000. If I do that in the long term, like, I'm not going to be as profitable. There's going to be certain trades where, yes, I'll take the scalp on like a break of the lows, but for bounce plays and breaks and retest setups, like, I'm going for bigger R multiples. They're longer term trades and I need to let them play out. So that's another thing about having your playbook. It's like you have to have your plays predetermined as to what you're going to be doing, and you have to stay consistent with that. So for my bounce plays, for my breaks and retest setup, again, like, I'm looking for bigger R multiples, and if I'm holding for bigger R multiple trades, then I need to let them play out. So price action essentially just consolidates here. Price action starts to pump. And now I start to think, it's like, okay, well, should I get out of this position? I'm up 10 grand. I'm up a little over a 2R multiple on this portfolio. On this portfolio, I'm up 13K, which is also just about a 2.5R multiple. And then I think to myself, it's like, you know what? I'm going to wait. If price action closes under these highs, I'll close it. If price action closes above, then I'll hold to my targets. So I'm going to continue. So now here's the problem. Price action actually rejected this area. And by the time price action actually did reject, and I'm taking you guys through my thought process with this trade. By the time price action did actually reject the area, it's like, okay, well, again, it comes back to that R multiple situation. Should I take the profit off the table, or am I going to try and hold this all the way to my main target? Which, with the amount of volume that we're seeing today and how buyers held this, I knew that there was still a good probability that we could see price go all the way to target. So I trusted in my system and I trusted in my analysis, which you guys can see we had pretty much almost a 100% pullback from my entry, almost at break even there. And there was a point in the trade where I actually believe price action did come all the way back down and break even. So we see price actions pumping up there, and then again, this is where the intrusive thoughts come in. This is where it's like, okay, well, I'm up a 2R again, like, I could get out, close my trade and profit, be green on the day. But then that's just me thinking about the money and not thinking about performing as best as I possibly could to really maximize how much money I am gonna make. And that's what makes trading difficult. So then I'm gonna fast forward here a little bit, because price action does come down quite steeply. I don't remember if price action hit break even, but at this point, I'm like, you know what? I can't keep watching this action right now. I'm gonna go get some water. I'll be right back. I'm gonna set my hard stop. So my hard stop is there at 4,500, 4,750, as you guys can see. My stop wasn't 5K. It was originally at 5804.5. So I'm gonna fast forward here. Came back with my water. And then there you go. So this is what I wanted to show you guys. So again, price came all the way down, tested VWAP, and then bounced up to continue to actually hold the position. And with today's volatility, I knew that if I wanted to see price action push all the way up into the 58.20s, like I would have to see a strong close before I could above the 58.16s, above the 58.15s, for me to then start trailing stops. Because if I were to just completely move my stops to break even with all of this volatility, with all this very wicky action, then there's going to be a good probability, a good chance that we're going to see price action stop me out and then continue to run to targets. You could call it that's most likely an experience thing, but I knew that that was most likely to be the case. All right, so I'm just watching price here again. Nothing too crazy. Just waiting for price action to pump up. So essentially what I was telling him now is like we have a really good probability that we could see price action pump up into the A15s. My game plan is once price action does get into the A15s, if we don't see new buying stepping above that, and if we don't see a close above it, then I'm just going to close the position because this day's been very, very hectic already, and I want to secure profits at that point. So what I started to notice was price action was giving us a little bit of a pullback towards essentially a zone. So what I noticed was that there was a ton of volume here. That price action also came in. There's a ton of volume over here, and then volume started to come in over here again as well. So there was a lot of action in like these 8-10s, which in the morning, we also saw a lot of action and a lot of trades being placed in that area as well. So then when I went down into a lower time frame, essentially what I saw was there having marked off. We had a little minor structure zone there. So I was like, okay, perfect. You know what? If price action breaks below this structure zone again, I'm gonna stop out, close whatever profit that I have. That's where I'm gonna trail my stop loss to. Because at this point, with these two major rejections that we've already seen towards the downside, price should just start to pump back up. And if it does pump back down into that area, then we could potentially see price action just dump, and I don't wanna be in the position anymore. So I started to analyze that. Which you could see, buyers hold that quite nicely. You can see price never broke below that minor structure point. And now price action is pumping to the A15s. So again, what my thought process here, what I was explaining was that if we see price action push into these A15s, I want to see immediately new buying step in. I don't want to see a rejection. I don't want to see any passive selling start stepping in at this area. I just want to see new aggressive buying push into this range, and then price action completely push. It was as simple as that. So I'm going to fast forward this a little bit here. So we can see now, I'm looking at this 5-minute time frame, we're trading above. I want to see price action maintain above. We did have new buying step in above the 15s, which is good. I want to see continued buyers step in above these 15s here. We have more buying stepping in. So I'm continuing to actually hold my position. As you guys can see, I've trailed my stop loss to just under that low, which is also going to be under that 15-minute candlestick low as well. Then candlestick closed above, so I'm still holding the position. And at this point, I'm like, you know what? If price comes back to the 15s, I'm just going to secure it anyways, which I believe I moved my stop loss up into these 15s. I trail my stops. And so I trail my stops up into these 15s, waiting for price to hit the 20s. So price action tapped into the 20s. I'm like, okay, well, if we see new buying step in above the 20s, then, I mean, we could easily see price action go up into all-time highs again. Like, we have a good amount of volume. We have a lot of buying stepping in. And essentially, what I'm waiting for now is, again, I'm looking at the footprints here. It's like, okay, we have a good amount of buying stepping in, and we have some sellers trying to step in here at the 19s. So what I'm going to do is I'm going to trail my stop loss up again even more. Which, as you guys can see, I'm watching this very closely here. So, okay, we got good buying stepping in here above the 18.75s. We have sellers trying to come in here at 58.19. We have the key level being here at 58.20, and I wanted to see again follow through with these buyers. So I'm just watching price action closely. I dropped down to a lower time frame to see what these even lower time frames are doing. I say, you know what? I'm just going to trail my stop loss to the low of this candlestick. If we see a push and a continuation, great. If not, then I'm willing to give back these extra like $4,000, $3,000 in potential fluctuation on this trade to potentially make more money. And again, these are all predetermined risks that I have to be okay with. Which, once price action started to break above this area, I'd say, okay, great. Like, it's actually working out even better than what I actually planned. And then I thought to myself, if we start to get back below the 20s, I'm just going to close it. Like, fuck it. Which right once I noticed price action started to pull back a little bit, we did have new buying stepping in, but I didn't like how we weren't getting follow through. I went to close the position, but price action kind of moved a little bit faster than I wanted to. My trailing stop got hit instead. And we're laughing over here because right when I was about to close the position, we see it go back above resistance. I'm like, okay, you know what? We did have new buying stepping again. You know, maybe I'm going to continue to hold this. And at that point, I was like, you know what? I'm just going to close it, bro. And then my trailing stop got hit. Over here, I'm still holding the position. I go and I close that position. So made about 15K on this trade over here, $20,000 on this trade. You can see the face of relief after going through that stress. And what's kind of crazy is that, and I think about this now as I'm analyzing all of this, is like, I've had bigger trading days before, bigger fluctuations in P&L, but the issue was, look at this 3-minute time frame, the push up, the push back down, the push up, the push back down, the push up, the push back down. A lot of those times where I had those really big trading days is because price action just straight went in my favor and it was easy to hold. But these are the trades that are super hard to hold. And it's hard to make the best, most logical decisions for your trade, but then at the same time, also being able to try and not lose money, try and make as much money as possible is difficult on these types of days. But anyways, guys, you know, just wanted to give you guys a transparent video again, show you guys my loss, then also show you guys the win. I'll talk to you guys in the next one.